All right, here we go, future CPAs. Let's run through some engagement quality control and using the work of others questions. Well, regarding a non-issuer's compliance with laws and regulations, an auditor performing an audit of the entity's financial statements is responsible for what? So, what is the auditor responsible for? Yes, we've got long lists of items that the auditor has responsibility for. Generally speaking, when we're going through any type of engagement, right, it's possibly providing an opinion, possibly providing a certain level of assurance, right? Also abiding by certain laws. Now, what I want to point out here in this question, there are a lot of verbs that I am not particularly fond of. So, for example, just kind of gazing through, I see ensuring and preventing. I mean, those are pretty definitive actions, right? So, when we think about this entire exam, anytime you see absolute assurance or guarantees that there's no issues, right? Guarantees that there's no fraud. Anytime we see make sure that there is no misstatements rather than no material misstatements, any of these absolutist statements are a little concerning. So when I see preventing noncompliance, I'm already not thrilled with this. So I'm going to cross off letter B. The auditor does not prevent noncompliance, right? Yeah, it's not your responsibility. You don't have the legal backing to prevent all noncompliance in an audit of an entity. Similarly, you're not going to ensure that the entity's operations are. I'm just going to pause right there. You're not going to ensure anything about the entity's operations, right? You are going to make sure that they are free from material misstatements. Say it with me. Say it loud and proud and clear. That's what you're doing. Now, what about determining whether an act performed by the entity being audited constitutes noncompliance? Okay, I think that's a little less deterministic. And then what about obtaining a general understanding? So, point one here, this is a tried and true, commonly brought upon point, regardless of issue or non-issuer, regardless of whatever gap or government audit, regardless of audit review. In most cases, 9 times out of 10, you're going to want to obtain a general understanding of the entity, of its business environment, of its industry, of its legal and regulatory environment, and the framework it needs to report to, because otherwise, how are you going to issue an opinion? If you don't know the standards that the client needs to follow, if you don't know, right, what the client does, if you don't know anything about the client, then how are you going to issue an opinion? So again, you will see this commonly in many different instances. So I would go with letter A. Looking back at letter C, determining whether an act performed by the entity being audited constitutes noncompliance. We're not the judge. This sounds like they want you to be the judge. We are simply, humble detectives searching through and trying to find material misstatements. So I am going to be left with letter A, right? Again, recapping that, letter A is a very common answer you'll see in many of these different questions. And also, we do not have any of these definitive things like preventing or ensuring. Those just leave a bad taste in my mouth. So, not those. Let's move along. Which of the following individuals would be considered a predecessor auditor? Now, predecessor and successor auditors pop up in many lessons throughout this exam, and rightly so, because we're using the work of others, or maybe in communication, we're going to be talking about them, right, in our engagement communication lessons, or maybe when it comes to the reports. There's just many instances they'll come up, so don't be shocked if you see questions about these in multiple sections. It all comes together, right? So which of the following would be considered a predecessor auditor? That's an auditor, right? Well, I guess that's what we'll talk about here. But generally speaking, an auditor that came before you that was engaged by the client before you came. So you could think of it like the client's ex, right? You are the new significant other. The predecessor auditor was the prior significant other. And which would be considered? Well, what about a client's accounting employee responsible for the preparation of the company's financial statements? Well, if it's a client's employee, that can't be an auditor, right? We think about that. There's no independence. You can't have your own personnel audit you. So that's not, just by the nature of that, I'm going to eliminate that. Kind of a ridiculous answer. Similarly, right, a client's an employee. So I'm not going to even read further than that. It doesn't matter anything after that. So not going to be a predecessor auditor. Now, generally speaking, a predecessor auditor, like in the most simple this context, we audit this year 2. The predecessor auditor would have audited year 1. So in the most basic form, that's what we're looking at. But let's keep reading along. An independent CPA who was engaged to perform but did not complete an audit of the financial statements. Okay, so that raises a question. Does the predecessor auditor in year 1, does that auditor need to have completed the audit? Or can they just have begun the audit and then they didn't finish it for whatever reason? Great question. And then what about letter D, an independent CPA who is considering accepting an engagement to audit financial statements? So this question is interesting, right? So if the CPA was considering to accept an engagement to audit but never accepted, they were never considered an auditor. If a CPA audited, I don't know, let's say 5%, and I'm just kind of throwing that threshold out there, it doesn't, it's not tangible, it's not like that's the rule, but if they just even audited a small percent, they're considered a predecessor auditor. It's maybe the client was just cycling through auditors and none of them ever finished a full audit. All of those CPAs would be considered predecessor auditors. But letter D says, considering accepting an engagement, but it was never accepted. So again, by default, the best clear-cut definition of what a predecessor auditor is, it's just last year's auditor. For whatever reason, they chose you this year. But in this case, the best answer is letter C, because an independent CPA, engaged to perform, did not complete, and this is all presumably last year, right? Again, got to read into the questions. You just see them as you go, and you got to get a flair for how they ask and write the questions. Here we go. Good work there. Let's move along. An accountant was asked by a potential client to perform a compilation of its financial statements. The accountant's not familiar with the industry in which the client operates. Now, that sentence, seen that plenty of times. I'm sure you've seen it. If you haven't, you'll see it as we go through. Seen it a lot. You can, before even reading the answers, right? Before even reading the rest, that always invokes the thought in my mind. You don't need to be an expert in the industry. You don't even need to know anything about the industry. Let's say I'm an auditor and I've spent my entire life auditing financial companies, right? Private equity, hedge funds, and all of a sudden this manufacturing client wants me to audit them. Well, disregarding any laws or regulations with big companies, let's just say, we're small time, I was auditing small, there was no big regulatory authorities over me. So I was auditing, these small financial advisors, and now I'm auditing a small manufacturing client. I can always either hire a specialist, I can obtain industry knowledge, I can gain experience, I don't have to say no to an audit just because I haven't worked in the industry before. Otherwise, that's just would, that would hamper the whole industry. It would make it a lot more difficult for companies to get auditors, and thus auditors would become more expensive. That's just me kind of giving you a little background into it, right? But the clear-cut standard answer is just because you're not familiar doesn't mean you have to decline the engagement. So I'm going to cross off letter B. Okay, so here is actually another interesting one. Do you postpone the engagement until you obtain the adequate knowledge? No, actually, no. You don't need to postpone it. You can just simply accept it, begin the audit, and while you're doing that, maybe you got to work a little bit harder. Maybe you got to study at night, but hey, you're taking the CPA exam. You're quite used to that. So again, you could accept the engagement and obtain that knowledge, or you could hire a specialist. You could do that. Now, letter C requests that management engage an independent industry expert to consult with the accountant. So, like I said, you can get a consultant into the works, but in this case, you're requesting that management do it. You can't trust management. Now, as much as they might seem great, it's up to you, right? Professional skepticism, it's up to you as the auditor to engage the specialist or the industry expert. So this is kind of trying to infringe on that right answer, but trying to trick you. So you're not going to request that management engage the industry expert. You are going to go and hire an independent industry expert. It doesn't even have to be an independent industry expert. If you're just trying to learn about the industry, it could be someone who had worked for the company before, right? It's not like they're giving you insight on how to audit them. They're just again, depends on the topic and the familiarity and the severity of it. But if they're just kind of explaining the ins and outs of how manufacturing works, it doesn't really matter. So again, there are two right answers to this one. It's just that the only right answer here is given is letter D. But again, you as the auditor can go and engage a specialist to help you out here. All right. In which of the following circumstances is an auditor most likely to rely on work done by internal auditors? Now, you are supposed to do the work because you're the independent auditor. And as such, you're the one who needs to get evidence to then issue an independent opinion on the client. However, you don't have to go at it alone. I mean, you are using the client's records. Now, can you use the client's internal auditors? Yes. I mean, we talked about this all the way back in engagement acceptance with the engagement letter, how it's at that point that you discuss how much the internal auditors are going to help you. Now, can you just let the internal auditors do all the work and you just take it for face value? No, not at all, right? So what you can do is let those internal auditors do work, but it has to be work that is completely, not completely, but mostly objective, right? Like if you trust the internal auditors to go on the Bloomberg terminal and just pull data straight from there, that's fair. But you can't expect to rely on internal auditors' subjectivity and determining if they think, a certain level of fraud is material or not. That's up for you to decide. Any level of subjective evaluation is totally up to you. So even for reference, right, take a look, read through this. This is from our lessons, right? So, the external auditor can rely on the internal auditor's tests, such as tests of controls for their own assessment of control risk, but it cannot be anything subjective like materiality, estimates, valuation, contingencies, anything that is subjective, meaning, right, that, it's like I might have a different answer than someone else. You cannot rely on it. So looking up a stock valuation on Bloomberg, if I do that or if you do that, we're going to come up with the right answer, well, unless one of us messes up. But right, in theory, both of us should come up with the right answer. But when it comes to materiality or estimates or valuation, those are areas in which me and you could each come up with different answers. So in any instance when there could be different answers, that's when you're going to need to do that yourself as the external auditor. So looking back at the answer choices, for financial statement amounts determined largely or entirely on the basis of estimates made by management, nope, you can't do anything with estimates. For financial statement amounts judged by the auditor to require little or no subjectively evaluated evidence, again, such as just Googling stock prices or Googling bond rates. So yes, I would say B sounds good, but let's keep reading. If financial statement amounts are material and the degree of subjectivity is high, yeah, no. So we're not going to trust them to deal with materiality and subjectivity. Not going to happen. And what about if the internal auditors have concluded that the risk of material misstatement at the overall financial level is negligible? No. We are not going to be able to trust them when it comes to so this is the risk of material misstatement. You can't trust the internal auditors to determine all of the risk of material misstatement, right? That's your entire job. So that's like saying, hey, we trust the internal auditors to do the entire audit. So yeah, we're not going to do that, right, guys? We're not going to do that. Leaving us with just letter B. Straight memorize it, but also understand it. Make sure it's clear and know it for the exam. Awesome. Great work here. Keep up the good work. High energy. This exam is exhausting, but it's even more exhausting? Taking it twice. So let's pass it the first time, move along, and have a good time with it. So thank you all for joining. I'll see you in the next one. Hey there. Are you ready to not only pass your CPA exams, but truly understand and enjoy the material while studying? I know it seems impossible, right? Especially to enjoy the material? We'll do it together. Tap into the power of cpa.examprep.ai, where we've got personalized quizzes, multiple choice questions, memorization guides, flashcards, simulations, all tailored to your learning. Our adaptive study planning puts you on the fastest path to success and lifts you back up if you fall behind. Avoid wasting your precious time and money attempting an exam with a low chance of passing, because who wants that? We want to get you through this process as quick as possible. Our exam readiness prediction lets you walk in with confidence, knowing that you're prepared for success on exam day.
Thankfully, there's no payment method needed to get started, so why don't you come join us? Visit cpa.examprep.ai and let's achieve your exam success together.